Hello, welcome back. This is going to be a month review of December. Last video I did was 12/6 and then I had the performance video update. Um, right now it's going to be this is going to be new data from 12/6 to today, which is 11/3, 1/3. And mostly because, I had finals and breaks, so I didn't really upload with weekly videos. And so now I'll go back to the weekly schedule and yeah, so let's see how December went. So you can see here, really good. Well, comparing to other charts, SPY and Nasdaq and Dow almost fell back around. They're going close to neutral right now, but right here, this big drop. So really, we can see since we last ended off, which was around here, we can see it mostly went up, right? You have this outlier thing here, and this is mostly because of the Fed. So went down and went back up. So just the volatile those 2 days. But yeah, and then here, this is just a money graph over here. So you can see we kind of kept up the same pace, which we'll see later is actually very good. Yeah, so here we've basically kept up the same pace of gains, and that is considering a major drop in the market, especially for Nasdaq and the other ones. So kind of what I wanted to prove what I said before in the performance review update in the 12/6 video I did, that I wanted to see, how would I do in bad conditions, and here we had some bad conditions, and we basically held on, and this is holding on 60% SPY, so you have to consider that we're basically neutralizing it, and we're even gaining a little, um, and yeah, and we basically just kind of kept on going up, so that's great news. Over here, we increased our percentage by 2%, so that's really good, especially for Nasdaq, which is a high performer. And we're at 1208 right now, and Nasdaq is 5.4, so we're actually outperforming by more than double. So yeah, great. Over here we have the S&P 500, so this is kind of what we're holding, and see even the difference is huge over here, right? So we're holding 60% SPY, right? And you can see we're still increasing and going up and up, and really here you kind of just kept on going down, gains, went up, it still went up us, and then went down, and we still went up, down, up. We're basically just keep on going up, except this last day here, which is kind of an inverse. But I mean, overall trend is still very good, increasing very high. Here, same thing, 52, and here we're increasing by, we're it's at 2.5, we're at 1208, so that's a huge difference, um, more than 5 times, or around four, around there. So you can see big. We're keeping it up, which is good. I wanted to keep these gains. Dow Jones is one of the worst ones right now. It is basically at 0% since if you would have invested at the beginning. So it's almost at zero after the whole election boom. Um, One of the worst outperforming ones, and we kind of just kept on going up. So great. 53.4. So this is more than the 52 from SPY and Nasdaq, but we're still doing quite good. And yeah, this is Dow Jones is basically neutral. And we're at 1208. So here we have, I wanted to put the graph from 12/6 to kind of give a reminder. So we were at here, NASDAQ, we were the exact same or close to the same as NASDAQ, and we were outperforming both SPY and Dow Jones. Not by a good amount, but NASDAQ was zero and SPY was around 2%, I think. But you can see now the difference has increased greatly. Here you can see now we are outperforming Nasdaq by a lot, SPY by a lot, and Dow Jones by a lot. Here was really the only weird part, right? So here's kind of like the Fed went boom and then boom, and so this volatility section was kind of unexpected for me. I expected it, but not so much because we kind of even went all the way down to underperforming or hitting right at Dow Jones, and then obviously we went back up, right? But so this is kind of like the weird part. But I mean, it's from that event, everything else has kind of just remained really good, kept on going up, even when this has gone up, right? So having the negative beta strategy, and we're still going up. I've been switching more to the positive beta one. We're using the bull ETFs instead of the bears. It's been helping, so I've been using it more, and we're getting up here, and right now we're still holding it up, and we're still doing great. And so here we increased it. Before it was 0.16%. Now we're at average is 0.17%. So that's really good. We're hitting that goal. And yeah, great. I mean, you have some big volatility over here from the Fed. Boom, boom. But now we're good. So here our profitability to negative is around 46 to 26. We've increased it from the last time. Last time the ratio was basically 1.6. Now it's 1.8, you could say. So we're increasing that, so that's really good. Here profitable trades also increased by quite a bit. Increased by, here you can see, by 5%. So that's quite a lot. And over here, so our mean gain increased by 0.09. However, our mean decreased by negative 14. We'll see a similar thing happen with SPY over here, that where the losses increased by quite a bit. However, I'll show later on. Right now, our standard deviation did increase by quite a large amount. You can see 0.14%, right? So we're this is the actually almost the exact same standard deviation as NASDAQ. So, what I said in the other videos was that this strategy has a similar risk level to NASDAQ, but, it's still outperforming it by a lot. So there you go. The S&P, I think okay, here back. So the S&P here, so you can see that it's increased by only 0.02, its gains, but its losses decreased by quite a bit. So we had a similar thing happen with us, to near 0.06 here, so it decreased by quite a bit there. And then the standard deviation also increased. So we had a similar thing happen with us. However, actually, good thing is that our ratios are still outperforming the S&P. So our gains to losses is actually better than the S&P. We're managing it better, and so it's going to be, here's the ratio, which is the average win for us, and then average loss, absolute value, average win for SPY, average loss, and then you just divide it, and that's the ratio. Now, this doesn't take into account, your leverage, right? If you're 2x, then that gets canceled out, but that's in the standard deviation. So, well, that would be on the next slide. But so our losses can be almost negative 0.9, or gains can be 7.5. So we still have quite a bit range. If we go back up, here it said our loss, so 0.89. So we can still lose quite a bit more, and then 7.5. So we still have a good range around 0.05. So yeah, let's see the standard deviations over here. So yeah, the difference when I 12.6 was 0.053, so we're doing a bit better then. Now we're 0.03, so we're still doing good. This is one way to look at it. Obviously, our performance is greatly better, so I think this is fine. It's pretty good, actually. We want to be 0 or above. And then here, our standard deviation, it only increased by 0.04, so we're doing good. We're only increasing by this, and the losses and the gains that we're doing really good. So transactions decreased by a good amount. That's good. And then day trades also decreased by a good amount. So yeah, just lower volume going in and out. And then so here I have the portfolio from 12.6. When I last did it was 8.864. Now we're at 12.084. So that's around a 3.2 increase in a month. So we're doing quite good. We'll see how January goes, but I think December was a very volatile month, end of the year, and right now we're just starting January, so we'll keep on doing the same thing. And yeah, so the good thing about this month is that it proved that, or I only have one sample here, but it kind of majorly proved that when something is falling, we're not falling as much, and we're actually even gaining. And when it's going up, most of the time we get those gains, and then that's why we're outperforming by, SPY's at 2.5 or something, and we're at 12. That's why. And and I'm happy about that. So see you later.